Very good evening, everyone. So today in this session,
Good evening, sir.
good evening, everyone. Very much good evening. Today in this session, we are going to start our workout session on the second unit. I mean, the head of income, the second head of income, being income from house property. Being income from house property. With regard to the income from house property, the following are the learning objectives. First, you should know what are all the concepts that were there in this chapter. See, this chapter hails around 5 marks to 6 marks in exam. So, important chapter. Important, very important chapter, 5 marks to 6 marks guaranteed chapter. So, let us first see what are all the concepts that are involved. First thing, from the workout point of view, I'm talking. From regular batch point of view, I have taken somewhere around almost around 40 hours on house property. I'm not talking about the regular session. From the workout point of view, what are all the important things that we need to understand? Okay. So the most important thing is understanding the concept of standard rent, fair rent, and actual rent. That is number one. Number two will be understanding the concept of annual value and its determination. Most important. Deductions allowed under the head IFHP. Next one is treatment of principal borrowed for house property, interest on borrowed capital, pre-construction interest. Next one, expenses which are not allowable as a deduction, concept of unrealized rent and arrears of rent received subsequently. Next, that's it. These are all the main concepts from the problematic point of view. So let us focus on them and try to complete it. Okay. See, first of all, I'm going directly into the concept. See, whenever a house property question comes in exam, first I will tell you the pulse of the institute. Okay. What institute will test in examination? Number one, first they will test you a question on one house property with multiple floors. First floor, second floor, third floor. First floor I will use for let out. Second floor I will use for business. Third floor I will use for self-occupied. This is one style of question they will ask. Okay. I'm talking about the pulse of the institute. Regular classes I will never go as per the examination. Okay. Means that does not mean I'm going beyond exam or something like that. Examination is not the motive. Every concept we have to read. But from the workout point of view, only exam points I will touch. All other concepts I will not. Which are already tested in examination in the past, I will touch them. Okay. So there is a element of risk in the workout batches. What is the element of risk? All the concepts, how we can cover. What is asked in the previous attempts, on that we are going to do. Okay. But if you are both the students, pakka, you will get 45 out of 50. Sorry. First, let us understand, but I will try to cover all important concepts. Okay, no worry. But one thing I wanted to tell. First, logic number one is they will ask a question in such a way that one house property will be given in the question, divided into three parts or two parts or four parts or something they will do. Unit division will happen. One unit will be used for let out. One unit will be used for self-occupied. One unit will be used for business. Okay. And another unit will be kept vacant. Four different calculations we have to do. That questions will come for 6 to 8 marks in exam. Okay. This is number one that we need to remember. Number two, second type of question. They will ask you, they will give you in the question municipal taxes, other expenses they will give. Okay, other expenses they will give. Whenever municipal taxes, other expenses are given, along with this kind of question, okay, always remember one thing. Municipal taxes and other things are deductible. Okay, only when the property is a let out property. If it is a self-occupied property, those municipal taxes and other things won't be given as a deduction. They are allowed as a deduction only if the property is a let out property. But they will ask a question, municipal taxes paid on the property. On the property means entire building they will give in the question. Therefore, we need to divide it into three parts. So municipal taxes, they give 60,000. We have to divide it by 3 and tell that 20,000 is the let out property municipal taxes allowance. Did you all understand what I said or not? Everybody.
Yes, sir.
I'm talking to you all. Everyone. Okay. Second. Story doesn't end there. Whenever question is given like this, along with IFHP, PGBP head also will get affected because building is used also to some extent for the purpose of business. Therefore, this will be claimed as a business expenditure. Municipal taxes 60,000, I said na, 60,000 divided by 3, 60,000 divided by 3, 20,000. 120,000 is already claimed by let out. Balance 20,000, 40,000, 20,000 we can't claim. Balance 20,000 will be allowed as a business expenditure. Understood everyone?
Yes, sir.
Everyone? Understood what I said?
Yes, sir.
Yeah, I'm not telling any joke here. I'm not telling any story. Whatever I'm saying now will be there in almost all the questions that are tested in IFHP in exam. So listen carefully. So this is how the treatment will look like. And third thing. Whenever the question is given with one building with multiple units, fair rent, standard rent, actual rent, municipal value, divisions will be there. That also should be divisible on the basis of the proportions. Means if they say 25% of the property is business, 75% is let out, then what you have to do, fair rent value they will give in the question into 75% only you should consider here. Understood? Everyone?
Yes, sir. Yes, sir.
You will make comparison, municipal value, fair rent, whichever is like that we will compare or not.
Yes, sir. Yes, sir.
While comparison, municipal value, fair rent, standard rent, actual rent, when you compare, since there is only one building which is divisible into 2 parts or 3 parts on a basis of proportion, fair rent, municipal value, standard rent also should be considered on the basis of the proportions only to the extent of let out value. Another adjustment. So proportionate values is another question they will ask. Fourth kind of question they will ask in examination. The fourth kind of question that they will ask is, they will give you unrealized rent in the question. Okay, what rent? Unrealized rent. Whenever unrealized rent is given, from the actual rent we have to reduce that unrealized rent. Okay, how to reduce that I will show you in the question. Unrealized rent, almost in every question they are asking. Next one, loss due to vacancy. Loss due to vacancy. This also I will show you directly when we come to the question, not now. So loss due to vacancy. This is another adjustment they will give you. And finally, sometimes they may give you data relating to resident not ordinarily resident. What do you mean by resident not ordinarily resident? If I am a resident not ordinarily resident, or if I am a non-resident, only Indian house properties only will be subjected to tax for me. Foreign properties rentals will not be subjected to tax. Everyone understood the point clearly? Yeah?
Yes, sir.
Okay. These are all. Next one. Next one is interest on capital borrowed. Interest on capital borrowed. In this interest on capital borrowed, it depends on two properties: self-occupied property, let out property. They can ask you 3 questions in this. First, interest on capital borrowed, principal on capital borrowed, pre-construction interest. Pre-construction interest will be allowed in how many installments? 5 installments they will be allowing. So, if you are paying some pre-construction interest and current interest, you will get 2 deductions: pre-construction interest and current year interest. Both will be allowed as a deduction. Okay. So, how much will be allowed, everything we will see when we come into the main concept. Okay. So, these are all various type of adjustments that institute generally test the student when it comes to the chapter IFHP. With this, we will start with this particular chapter. Did you all understand the concept clearly? Yeah?
Yes, sir. Yes, sir.
Okay. And in a summary,
Yes, sir.
I tried to explain you what are all they will ask in examination. Okay. So what are all the main areas in exam? In a summary, nutshell life, I have to tell this is how they will ask the questions in exam. Okay. Now we are coming into the next segment. First, let us see what are all some important points. Okay. See here. Property used for the purpose of business or profession. Okay. Property used for the purpose of business or profession. The property under consideration shall not be used by the assessee for the purpose of own business or profession. In such case, it is not subject to tax under the IFHP. Annual value of IFHP is not charged under the head IFHP, but considered under the head PGVP if and only if the business or profession has profits chargeable to tax. If by any reason business or profession do not have profits to charge for income tax, then annual value of such house property is chargeable under the head IFHP. Sir, I did not understand. That's why read fifth point carefully. Read it. Unnecessarily you will land in trouble if you don't read properly. Please read the words properly, clearly. See, what I am writing is income from house property. Annual value becomes taxable. Property should be there, means buildings and lands. Ownership is required. Okay, but always that is not required. Beneficial ownership is also enough. Assessee can be anyone, resident, non-resident, individual, HUF firm, company, etc. And it should be used for any purpose other than business or profession. If it is used for the purpose of business or profession, what will happen? I am asking you to read it properly. You need not read this, read up to here. Have you read, everyone?
Sir.
Everyone, please. I already told na this is one of the adjustments that they gave in exam.
Yes, sir. Yes, sir.
Okay. See, I will tell you the significance of this adjustment. See here. Whenever the property under consideration is used by the assessee for the purpose of his own business or profession, in such case, it is not subject to tax under the head IFHP. It is not subject to tax under the head IFHP. See here. If I am using, hey, understand carefully. Okay, understand carefully. Now, use your common sense and tell. Self-occupied property, what is the annual value?
Zero.
What is the annual value? Annual value will be nil. Yes. So annual value is a nil. Nil for which property? Self-occupied property ke annual value is a nil. Now, what do you mean by self-occupied property? I am occupying my property for my purposes, my residential purposes. I call it as a self-occupancy. Now, I am using the property for my purposes only, self purposes only, but not for my residence, but for my business or profession. Now, what is changing? The head is changing, but nature is same, na? Answer.
Yes, sir. Yes, sir.
Nature is changing.
Yes, sir.
Nature is same, but the head is changing. Purpose for which you are using self-occupancy. First one, self-occupancy for residence. This one, self-occupied property for business. In both the cases, I am using for my purposes only. There, if annual value is nil in house property, how come it will become some amount of annual value in PGBP? That's why in PGBP, if you are using your own premises for the business, rent should not be charged to P&L. Do you all understand the point or not?
Yes, sir.
Do you understand the logic of what I said now?
Yes, sir.
What is the annual value of a self-occupied property?
Nil.
Kada? And what do you mean by nil? There is no value for that. Zero value. Correct? Now reverse the case. I am using for self-occupancy A, but for my business. Okay. But self-occupancy A, whether it is for business or this, if you are using for business, PGBP head will occur. If you are using for residence, so IFHP will get occur. But business, if you touch na, automatically what will happen? There also annual value of that property is nil. Annual value nil means what? There is no rent on that property. Rent will be zero. Do you understand the point, everyone? So, exam questions almost, I will show you now. Almost every exam they are touching this point. So, be very careful about the adjustment. Any kind of house property used for the purposes of business, rent should not be charged again. Rent is not deductible expenditure. When rent will be deductible expenditure? When you really pay rent, then only rent will be deductible under PGBP. Understood?
Yes, sir. Yes, sir.
If you really pay na, then deductible. Just like that, notionally, you should not allow that. Clarity, yeah. Can we go on to the next one?
Yes, sir.
Yeah.
Yes, sir.
Next one. Next one. So, self-occupancy for residential or let out to others is chargeable under the head IFHP. Sir, what is this? Hey, listen again. Listen again. I have a building. I have a building. Okay, I will ask a question. Tell me. I have a building. I gave to some person for his business. Which head will get occurred? For his business.
I will first, sir.
You are not listening. You are not listening to my question. I have a house property. I am giving it on rent to some person for his business or profession. Now that income will be chargeable under that IFHB or PGBP.
PGBP.
IFHP only, not PGBP. When it will be charged to PGBP? If it is used for own business.
Okay.
I have no business. Some other person's business can have given it on rent. Then it will be chargeable under the head IFHP only. So, let out of property for others' business is chargeable under IFHP. Self-occupancy for residential purpose or let out to others is chargeable under the head IFHP. That's why see here. One small table will clear all your doubts. See. Situation, business or profession, others. Okay. I am doing my business or profession. I am doing my business or profession for self purposes. Okay. I am using, see here, see, matrix should be seen this way. I am using property for my self business or profession. IFHP? No. I am using it for my self purposes other than business. Yes, it is IFHPA. I am using the property for others' business. Yes, IFHP. I am using for others for their self occupancy. Yes, again IFHP. Everyone understood the concept now? Clarity?
Yes, sir.
Yeah. Next. Just now I told you unit wise you should see. Occupancy annual value shall be calculated on portions wise for a building. If assessee if assessee self-occupied a portion of building, remaining portions can't be claimed again as self-occupied property for the same assessment year. Case laws, other things I don't want to discuss now. Income from subletting. Let us discuss one point here. Income from subletting. What are all important? What I feel I am discussing them. See here. A is the owner of a property. Let out this property to B. B sublet this property to C. Okay, B sublet this property to C. See here. In order to charge tax under the head IFHP, some basic conditions are there. See the screen. Ownership is one of the condition. In order to charge tax under the head IFHP, assessee must be the owner of such property. Okay. If assessee is not a owner, then income is not chargeable under the head IFHP. Okay. Now see the point. See the point. A is the owner. Let out property to B. B sublet the property to C. Now, income earned by A, I will definitely charge under that IFHP. Taxable under that IFHP under section number 23, undoubtedly. However, income earned by B from C on the subletting, any income is received, that income is not chargeable under IFHP, but that is chargeable under IFOS because B is not the owner of the property. Did you all understand the concept?
Yes, sir.
Okay, so that's the problem, and this is a solution. Next, important. Okay, now see, directly I am going into computation schedule. Computation schedule. Section 23 provide for manner of computation of annual value for the purposes of section number 22. Rule section attached to section 23 has provided for three types of values to calculate reasonable expected rent, and it is as follows. Sorry, forget about all other things. First, concentrate on calculations and understanding the concept. There are three values: municipal value, fair rent, standard rent. Municipal value means value decided by the local authority or municipality. Okay, for example, Hyderabad city is there, GHMC. Greater Hyderabad Municipal Corporation will decide the municipal value of the properties there. Are you understanding? So, for example, I am now in Vijayawada. Vijayawada, there is one municipal corporation, like its name is VMC, Vijayawada Municipal Corporation, that will decide the property values in this city. Are you understanding? Like that in Chennai city also it is there. So, what will happen? Municipal values will be determined by the municipal authorities, local authorities will decide. Next, fair rent means generally in that locality, this property will fetch this much rent. There will be an estimator, that's fair rent. Standard rent means under Rent Control Act, they will tell this is the maximum rent you can collect for a property in this locality. This is something like a MRP for a product. What is the full form of MRP? GST you might have written MRP. Maximum retail price. What do you mean maximum retail price? What do you mean maximum retail price? What is the meaning? That is the maximum price at which you can sell the product. Beyond that, you cannot sell them. Clear? Like that. That MRP concept on rental say standard rent concept. Understood?
Yes, sir.
Okay, done. So three rates are given. From here, concentrate properly, or else you will fail in doing the questions and answers. Concentrate on the table properly. Don't neglect. See here. First thing, we have to calculate gross annual value of a property. Sir, how to calculate that? All I will tell you. First, see the computation table. Okay, this table was drafted as per ICA norms. You can also have alternative answers. That's why, as per ICA norms, I am writing here. See. So, as per the norms of ICA, I am doing this table. Okay, see here. First point number one, computation format for a let out property. If your property is let out, then what will happen? There is a schedule. Gross annual value, take it first. From that, remove the municipal taxes. They will give in the question. Municipal taxes, whenever I say, municipal taxes actually paid during the year only are allowed. Okay, municipal taxes actually paid during the year are only allowed. Now I will ask a question. Last year municipal taxes I did not pay. This year municipal taxes I paid. Last year municipal taxes also I paid this year. Now I will be getting two deductions or one deduction. Everyone? Answer, yeah.
Two deductions.
Two deductions you will get, not just one. How many? Two deductions you will get. Municipal taxes of this year will be allowed only this year. If you don't pay lifetime disallowance, like that it will not be. Government is not a sadist. You pay and take the deduction. Until and unless you pay, don't take the deduction. From this, what you have to understand, even though you are maintaining your books of accounts on an accrual basis, municipal taxes has to be allowed only on a cash basis. Got the point?
Yes, sir.
Hey, in your books of accounts, you do whatever circus you want. Books of accounts, if you do not pay municipal taxes, what you will do? Outstanding municipal taxes on house property, you will write. Put it on P&L debit. You may allow it as per your books of accounts, but government will not allow what are not paid. Only what municipal taxes you actually paid, only that will be allowed as a deduction. Everyone understood the logic clearly?
Yes, sir.
Okay. These are all examination adjustments. At that time, don't put blank face. Okay. Gross annual value minus municipal taxes we deducted. We will get a value called as a net annual value. Okay. Net annual value. Now we are going to take deductions under section number 24. Okay. Deductions under section 24. There is a standard deduction. You will tell the rate. Tell me, what is the rate? At the rate of 30%. Standard deduction is given at the rate of 30%. And the next one, we will also reduce interest on capital borrowed. This is a separate set of discussion. We will make it separately. Okay. Then it will become the taxable value of IFHP. Taxable value of IFHP. Next. So what is the step one? Gross annual value. How to compute the gross annual value? See here. Computation schedule for gross annual value. Step one, calculate the reasonable rent expected on the house property. This I call RER, reasonable expected rent. Okay. Compare municipal value, fair rent, and standard rent. Okay. So what we have to calculate? Reasonable expected rent. See, this is the computation for reasonable expected rent. First, identify the MV, identify the FR, identify higher of MV and FR. Okay. So MV or FR, whichever is higher. One answer will come na, either MV or FR, one answer will come na. Compare that with the standard rent. Okay. Whichever is lower. This will be, the resultant will be called as reasonable expected rent. Like this, if it is a difficulty, see this diagram. Municipal value or fair rent, whichever is higher. Okay. One answer will come. That is the circle. One answer. Compare it with standard rent. Okay. Whichever is lower, one answer will come. This is called as a reasonable expectation. Everybody understood this diagram clearly?
Yes, sir.
Yes, sir. Yes, sir. Yes, sir.
Yes, sir.
Yeah. So this is the diagram, easy way to understand. So first we have to compute this. That you put in the step one. Next, calculate actual rent receivable after deducting unrealized rent, but before deducting loss due to vacancy. Okay, calculate actual rent receivable after deducting unrealized rent. Okay, but before deducting any loss due to vacancy. Means what? Unrealized rent shall satisfy 4 conditions as in the rules. I will tell you those. Again, I am repeating. Actual rent means what? For example, I will give house property on rent at 10,000 per month. 12 months ki it will become how much? 1,20,000. But 2 months that the tenant did not pay me money. Then to what extent it is fair to force me to pay tax on what I did not even collect? Therefore, government is not a sadist. Again, I am telling you. Therefore, government will not tell, though you do not collect, you should pay. Government is not a sadist. 10,000 rupees per month into 12, 1,20,000 you should have collected. But that fellow cheated you. He ran away, 2 months rent he did not pay. Okay, this is called as an actual rent receivable. From this, unrealized rent we will deduct to 20,000, 10,000 we sorry 1 lakh we will consider. Everybody understood the concept clearly?
Yes, sir.
Okay. Now starts the real fun. Now starts the real fun. See, now you may get a doubt, sir. If that be the case, na sir, we are all Indians, na sir. cheating is our birthright na sir. So what I will do sir, intentionally I will give actual rent as very low amount sir, 2000 3000 I will give sir. Then what will happen sir, now I will pay tax only on 2000. See, lawmaker in section number 23 has clearly used the word annual value of the property will become taxable, not actual value. Okay, annual value is are taxable. What is the difference between annual value and actual value? Actual value means what you received. Annual value means inherent capacity of that property to generate income. For example, I am in T Nagar. T Nagar, for example, I am in West Palm. West Palm building is there, 4-floor building. A 4-floor building, there will be some revenue earning capacity in that Mambalam area. Hey,
Yes, sir.
Purinja everyone.
Yes.
So, in that Mambalam area or some area, you take T Nagar, Nungambagama, West Palm, whatever the area you take, because I am closely connected with that area, I am talking about them. So, point is, in that particular locality, there will be one renta. Okay, even though the rent is charged at that rate, tenant is my very close friend, he has given me at a 50% only. That means it is now your fault. Though there is a revenue earning capacity of 1 lakh per month, you gave rent for 50,000. Therefore, third step came. So the basic value will become step 1 versus step 2, whichever is higher. Whichever is higher. In this and this I will compare, whichever is higher I will take. Okay, one value will come. From that, I will remove loss due to vacancy. Loss due to vacancy means 1 month I did not even give it for rent. It was vacant throughout the month. That 1 month loss due to vacancy, 1 month rent I will deduct here. Final touch is called as gross annual value. Gross annual value, you will remove municipal taxes, you will get the net annual value, then you will deduct standard deduction. Since standard deduction of 30% is given, in that 30%, your maintenance, all kinds of expenses are included. Balance 70% will become taxable. From that, again, interest on capital borrowed. Interest on capital borrowed, again, 2 types are there. Actual interest for that year, pre-construction interest. After that, balance will be taxable under the head IFHP. Everybody answer understood?
Understood, sir.
Okay.
Yes, sir.
Okay. Now, see here. For computational purposes, let us have certain points. Okay. Annual value. Section 23 aims at imposing tax on house property on annual basis. Okay. Though it is actually collected on a periodic basis. Rent will be collected per month, but I will tax only on annual basis. That's why the word is annual value. Deemed value. Annual value calculated will be deemed to be the annual value, not the actuals, irrespective of actual. Okay. Basic comparable. Always the first preference is on reasonable expectation of the rent on HP. Supra. Supra means super reference above. Okay. Next. Actual rent adjustment, all these things I have done. Unreal, this is important here. See, annual rent, unrealized rent, annual actual rent. Conditions to claim deduction for URR, unrealized rent. There are 4 conditions. Tenancy must be bona fide. Means what? Intentionally, you should not tell to the tenant 12 months in a year. Okay, you pay only for 10 months. Don't pay for the remaining 2. Don't pay for the remaining 2. Please tell me, what do you mean by don't pay for the remaining 2? Can anyone tell me?
What will vacancy?
Black money.
See, Indian has answered. One Indian has answered. That is black money transaction. See, vacant illa. Account for is only for 10 months. Remaining 2 months, they will pay in cash. And they will tell that, yo, tenant did not pay me money properly. See, in my bank account, 10 months rent I received. Okay, government said that we also were. Huh?
Most of the hostels are they collecting in cash.
Hey, I'm not here to take your controversial questions. Listen carefully. Okay. If they take, then tell to Department of Income Tax something kirikiri is going on. So, okay, listen. See, I forgot what I am telling. See here. Tenancy must be bona fide means what? There is no bad intention in mind between the owner and the tenant intentionally to escape the tax. Okay, you should prove that, sir, proper agreement is there. Receipt will be only through bank account. So we did not receive. You should prove that. So tenancy is a bona fide tenancy. Second thing, defaulted tenant has vacated or taken steps to vacate him. He is not paying you rent. Still you are sitting silent like a Gautam Buddha. Lawmaker says that for Gautam Buddha deduction is not available. Okay, you should revolt against them. Okay, just like that, sitting silent will not give you anything. So you should have taken some steps against him to vacate. Okay, next. Defaulting tenant is not in occupation of any other house property. It is super. There is a defaulting tenant. That idiot is not paying you rent properly. Okay, you said that, hey, please vacate this property. Go to that property and don't pay rent. That's sadism. Wherever he will not pay. Therefore, he should not be in the occupation of any other property. If we tell that don't be in this occupation, means in any other property should not be. If some other property is again occupying, some kirkiri is going on between both of them, owner and the tenant. URR will not be allowed as a deduction. Condition 4. Assessee has taken reasonable steps to institute legal proceedings for recovery of URR and proved AO that legal proceedings are proved to be useless. These all you have to write in exam. Then only they will give the marks. Unrealized rent question will come in exam. At the time, working notes, what you have to write? It is assumed that unrealized rent has satisfied all the 4 conditions. Condition 1, tenancy is bona fide. Condition 2, defaulting tenant has vacated or steps have been taken to vacate him. Number 3, he is not in occupancy of any other property belonging to the assessee. Number 4, assessee has taken reasonable steps. Assessee has taken reasonable steps to institute legal proceedings against him, and those legal proceedings are proved to be useless. Means what? Assessee like a hero, owner like a hero, came to tenant and said, will you vacate? Or he said that, first do something to this. Then he went back. Do you understand what I said now?
Yes, sir.
So the Rajnikant Madri, he wanted to do something, but like a comedian, he said that this also you cannot do. Go. Okay. Now I tried to behave like a hero, but actually that fellow became a comedian at the end of the day. If that be the thing you can prove in the court, no problem. Again, unrealized rent will be allowed as a deduction. You are not taking any legal steps against him, then why he will vacate? So therefore, these are all the 4 conditions. Next one. How to, this is another question here. Property sold during the year, how to treat? Once I complete all adjustments, now problems time, I should not see anyone sitting idle. You should answer me properly. Property sold during the year, how the treatment should be? What if a property sold during the year? I used the property for 9 months, balance 3 months of property are not there with me, I sold. In that case, all values in the question should be taken only for the held period, not for the sold period. That's why MVFRSR holding period divided by 12. 9 by 12, 6 by 12, 8 by 12, like that we need to take. Everybody say 1 yes, understood this?
Yes, sir.
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Next adjustment they will give in the question. Rent differential treatment. If the rent for one part of the year is different, almost all the problems have this adjustment. They will tell that rent from April to September 20,000, September, October to December 18,000, like that they will tell. Now you have to compute everything and take. See here. If rent of one part of the year is different from another part, then rent actually received for each part shall be considered separately. Part of the month shall not be taken as full. Shall not be taken as full. For example, they will tell April to June 15. April to June 15. That's right. See, I am giving an example. If the rent is rupees 10,000 up to August 15, and thereafter change it to 15,000, 10,000 shall be considered for 5.5 months. April, May, June, July, August. August, another half only is there. So therefore, April, May, June, July. Okay, now next August. So they will take only 5.5, 4.5, 5.5, like that they will consider. Okay. Next, loss due to important here. Loss due to vacancy. Loss due to vacancy shall not be deductible from ARR like URR, but it should be deducted at the last stage before calculating GAV. Before calculating GAV. Issues on municipal taxes. Municipal taxes are deducted from GAV. Municipal taxes deemed to include service tax component also. All other service tax, etc. Municipal taxes levied by local authority are only deductible, not by any other central government authority. Municipal taxes are deductible only if it is borne by the owner and actually paid. Hey, another adjustment they will give in exam. Municipal taxes will be paid by tenant. That will not be allowed as a deduction for you. Okay. Next, owner's method of accounting is irrelevant. If the property is situated in foreign country, then municipal taxes levied by foreign local authority and are paid by owner are actually are deductible. Municipal taxes paid by tenant are not deductible by owner and they cannot be even added to ARR, actual rent receivable, since payment of municipal taxes is a statutory obligation but not a rental obligation. Understood all the points, everybody?
Yes, sir.
Yes, sir.
Everyone understood?
Yes, sir.
Yeah. Read all these municipal taxes points once. Once completed, we will start doing the questions and answers.
Sir,
Yes,
what is the service tax component talked about in the?
I will show you in the question. One question is there already. I will show you there itself. I am putting also these last 1 minute time I will give. Fastly cover all the analysis on taxable value. Yes, from here. From here. Please do it fast. Yes. If
Property taxes paid by the owner should be included by the company.
you're talking about property tax, huh? Okay. Oh, you are asking how to treat the property tax, huh? Property tax. I will tell you. I will tell you. Problem question is there. Already one question is there. Or wherever your question is already there in any of the problems, we will deal directly there itself with the numbers.
Sir, can you please? Sir, can you please share the notes and the question banks of the topics covered?
It's already there. It's already there in the group. I will share one
No,
more time.
IFSP is not there. The notes are not there for IFSP, and for the basic concepts, question bank is not there.
IFHB not there. Notes.
Notes.
Okay, okay. I will see now. Read as of now. I will do.
Sir,
Yes.
sir, for example, we are expecting from realized, but into vacancy, why we separately GAs?
Why we separately deduct from?
Even it is being there, but not giving rent, that is you are last year vacancy means separate. So both the scenarios are different, but everything is same on you, but why
No. First one is a unrealized rent is a default. Okay, unrealized rent is a default. Default by whom? Default by the tenant. So from the tenant amount only we are deducting it. Vacancy is your default by not giving the property on rent properly. So we don't want to give the advantage there itself. Okay, both are not same. How can you tell both are same? First one is default of the tenant. Second one is the default of the owner. Hmm. No. So completely both are different. One is a default committed by the tenant. Another one is negligence of the owner. Okay. So it will be deducted from the total amount that we calculate before calculating the GAV. Final point.
IFSP handwritten notes are there, sir.
Huh?
I have to see it. Notes are there in the group actually.
Notes is there. I shared. That's why.
Yes, it is. Sir, I wasn't in the group when this was shared. I joined it.
Oh, okay. I will share them. Because I shared it. I know. I remember. Okay, sir. Anyway, no problem. Now up to here, everyone had a clarity. Yeah. Shall we start?
Sir,
Okay.
Also the basic of question bank not
What are those? What are those?
basic concepts question bank and those two just happened one day before yesterday and before that recordings.
Recordings I upload on YouTube. That's why. First 3 days I will upload along with this. After that I will upload directly in the app.
And then question bank remaining.
Question bank I will upload in the group. First 3 days, until day 1, day 2, day 3. Today also I will upload on YouTube. After that everything will come in the app directly.
Okay, sir. Okay. Question bank will come in.
Group only I will share. WhatsApp group.
Oh, okay, sir. Thank you, sir.
Okay. Yeah. Sorry. Let us see this. Now, no more questions on books and other things. Focus on this. Let's complete. See here. I will first make you to do one general illustration. After that, we will go into big ones. Okay. See here. Municipal value. Whenever question is given in exam, they will give like this. Municipal value and fair rent. Municipal value and fair rent. Always what we need to see? Municipal value and fair rent, whichever is higher. 107. Compare it with standard rent. Standard rent is not given. Okay, standard rent is not given. So 107 will be selected here. Actual rent you should compare. Okay, you should compare it with actual rent. Actual rent is how much? 103. Are you listening, everyone?
Yes, sir.
So municipal value, fair rent, whichever is higher happens to be 107. Compare it with standard rent not given. So 107 is selected. Actual rent we have to compare. Okay, actual rent we have to compare. Then actual rent if you compare, how much you will get? 107 or 103? Yeah.
103 only.
You are not listening properly. You are not listening properly. You are giving mixed answers. Start again. What is the municipal value and fair rent, whichever is higher? 107. 107 and nothing is available. Nil. So don't consider this. So what is the amount selected now? 107. 107 compare it with actual rent, whichever is higher. 107. So now listen carefully. 107. So 107 is selected and there is a unrealized rent of 1. Correct?
Yes.
Okay. See here. Actual rent receivable 103. In this one we have to remove. Total became 102. 102 comparison with 107. Whichever is higher means what is selected? Now did you understand how to work out? Everyone understood?
Yes, sir.
Okay. Now if it is understood, I will do another one and I will ask questions to 3 different students now. Please everyone unmute when I ask you. Okay, unmute when I ask you. See here. Let us take, I will take a scenario, house property 3 and I will explain one last time. Remaining 3 I will ask questions. See, municipal value or fair rent whichever is higher. 107. 107 is the selected amount. Standard rent whichever is lower. Standard rent 88 is selected. Actual rent 86. Unrealized rent 185. 85 or 88 whichever is higher. 88. This is the answer. Everyone understood?
Yes, sir.
Now, now let us ask question to some students. They will answer. Desiya Priya, are you available?
Yes, sir.
So you try answering number 5, house property 5.
Okay, sir. Municipal value and fact, whichever is higher, so 107, and then comparing fact with the standard rent, whichever is lower, so 107. Then we should compare it with the actual rent minus the unrealized rent, so that will be 95, whichever is higher.
95
that will be- Whichever is 107 or 96, whichever is higher. So 107 is the answer.
Perfect. 107. Very good. Next. Next one. Ganesh, are you available? Ganesh, are you available? Answer house property 3. 3 I gave answer. Then answer for 4. No. Start again. Then why 135 came again? Continue. 112. Everyone got the answer? Understood?
Yes, sir. Yes, sir.
Yeah. So that's how the answer will come. Sir, I think every one of you understood the concept clearly, right?
Yes, sir.
Okay, done. So now let us do one small question also on Adjustments having loss due to vacancy. Okay. Before that, let us see this question. X owns a house property. Municipal value 1,45,000, fair rent 1,36,000, standard rent 1,24,000. It is let out throughout the previous year. It is let out throughout the previous year. Rent being 8,000 per month up to November 15 and 14,000 per month thereafter. X transfers the property to Y on Jan 31st, 2025. Find out the gross annual value of the property in the hands of X for the assessment year 25-26. Now, 2 minutes time for all of you. Solve and tell the answer. Solve and tell the answer. Have you completed, everyone?
One minute, sir.
No, you first do it. You first do it. Did you understand the adjustment which is important in this case, everyone?
Yes, sir. Yes, sir. Yes, sir.
So there is a part rent, there is a differential in the rent collection. April, May, June, July, August, September, October. November fully not completed, only partially completed. So it is 8 months, 8.5 months, 7 months, 7.5 months. Yes, 7.5 months. And very, very important adjustment is your rent differential will not affect municipal value, fair rent, and standard rent. That will be same. Just you will break them into two parts, 7.5 months and balance 4.5 months. Understood, everyone?
Sir.
Yes, sir. Yes, sir.
Have you all done?
Yes, sir. Yes, sir.
If possible, display your answer on the screen.
Yes, sir.
If possible, display your answer on the screen. You are working. One person has done 1 lakh. Okay. 1,03,000. What is the final answer? 1,03,333. Yeah.
Yes, sir.
1%. P
Yes, sir.
is showing the answer 1,03,333. Arvind is also showing the answer 1,03,333. Okay. Rahul, your answer is not properly visible.
Yes, sir.
What is your final answer?
1,03,333. Yes, sir.
Okay. Everyone got the same answer?
Yes, sir. Yes, sir. Yes, sir.
Okay. See here. First, proportionate basis of calculation. Municipal value will be 1,45,000 into 10 by 12. Okay. See here once. Everyone listening? First, answer my question. In this question, there is one very, very important adjustment. Property is with him completely. Transfer the property. అంటే అసలు for 2 months అంటే for 2 months you should not even consider fair rent and actual. I already told you this adjustment.
Yes, sir.
Okay, so municipal value for 10 months 120,833, fair rent 113,333, standard rent 1,03,333. So we compared, finally we got answer as 1,03,333. Calculation of actual rent, occupancy 10 months, vacancy 2 months. Vacancy is not because of loss due to vacancy, it's by sale, ownership is missing, therefore IFHB will not get attracted. April 1st to November 15, 60,000, 95,000, there is no unrealized rent. So 95,000 is the answer here. What is it? Actual rent. So 1,20,000 and 1,13,333, whichever is higher. 1,13,333. Compare it with 1,03,333, whichever is lower. 1,03,333. Compare it with 95,000, whichever is higher. 1,03,333. That is the final answer. Everyone got the answer?
Yes, sir.
Yes, sir.
Yes, sir.
Sorry, got the answer. Okay. Did you all present your answer in the same style?
No, sir.
Then they will not give marks. That's how you will lose. This is how the presentation should be. Why we are doing workout batch? Yeah? You should know how to present the answer. First, you have to calculate like this. Working notes. Your main schedule is this one. But working note should form part of the answer. Na? So first you have to write calculation of reasonable expected rent on proportionate basis for 10 months. Calculate. Next, as per 23 subsection number 1 class A, this is how the value came. So therefore the reasonable exam you have to write this fully. Reasonable expected rent is rupees 1,03,333. Next, calculation of actual rent. Year, occupancy, vacancy. Like this you have to show your answer. Then they will give you that 5 marks in exam. Everyone understood how to present the answer?
Okay, sir. Okay, sir. Yes, sir.
Done. Now, let us do one illustration on loss due to vacancy and try to understand how it look like. Okay. I will do one question for you. Okay. X, Y, Z, A, B. I will do for A. I will do for A. I will ask questions X, Y, Z, B to some students in the class. Are you all ready?
Okay, sir.
Okay.
Sir.
See here. Municipal value fair rent, whichever is higher, 117. Fair rent and standard rent, whichever is lower, standard rent. Actual rent will be annual rent minus unrealized rent. So 115 is the selected amount as of now. 115. I will write here for your clear clarity. 115. Okay. Actual rent will be 121 minus 50, which will become only how much? 71. Okay. Now what will be selected? 115 or 170, 115 or 71? 115. From this they will reduce this one and write 114. This one is a loss due to vacancy. Everybody understood?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. How much is the final answer?
114.
114. Let us see. 114. That's his answer is completed. Now, 2 questions I will ask here. Then we will do direct questions. Archana B available?
Yes, sir.
Archana B, are you available?
Yes.
Yes. Answer Z. Explain.
So municipal value of flat rent, whichever is higher. So 60 or 68, 68 is higher. Then should compare with standard rent, 68 or 70, whichever is lower. So we should take 68. Then we should compare with the actual rent. 73 less, unrealized rent for 5. So 73 minus 5, 68. 68 of 70, whichever is highest, 70. From that we have to reduce. Vacancy
Oh,
amount.
oh, 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 oh. रुको जरा सबर करो. See again. Come again.
68.
Come again from the beginning again.
Okay, sir. Municipal value of carbon, whichever is higher. So 68. Next, should compare with the standard rent, 68 of 70, whichever is lower. So 68.
Then where from where 70 is coming again?
First. Next, should compare with actual rent. So 73 minus 5, 68. So 68, 68. So answer will be 68. Then last due to vacancy should reduce 1. So 68 minus 1, 67.
That's it. Everyone understood the point clearly? Yeah? Everyone?
Yes.
Okay, this is how we need to do. Now, I will select one or two students. They will answer the next illustration. Dhanush, are you available? Dhanush, are you available? Or you are busy in Bollywood movies? You are not there. You are still in Bombay only. Okay. Next, Sudarshan, yes. Are you available?
Yes, sir.
Sudarshan, yes. Are you available?
Yes, sir.
Yes. Solve property A.
So first we have to compare this to W 80 compared with standard whichever is higher, so 80. Then again we compare with standard rate, whichever is lower, so 80 or 80 again certain. Then we have to compare with the actual rent. There is realization we have to compare with the vacancy loss. So 80 compared with the 72, whichever is higher, so 80 is certain. Then vacancy loss 80, so 80 compare minus 18, 60. That is the
Perfect. Everyone, did you understand the answer clearly now?
yes, sir.
Everyone, clear? Okay. Now another person will answer another question. Anshu, are you available? Anshu. Anshu, are you available? Don't sit silent here. Try giving answers. Anshu, are you available? Next. Janani Balamurugan, are you available? Janani Balamurugan, are you available? Next one. Jahnavi Anumal Setti.
Sir, I'm audible, sir. Am I audible, sir?
Who is that? Janani, yeah?
Yes, sir.
Okay. Answer for Property Y.
Yes, sir. So municipal tax versus private, whichever is higher. 61 versus 66, 66 is higher. 66 has to be compared with standard rent, whichever is lower. So 59 will be the answer. So next this has to be compared with 57, annual rent minus unrealized rent. So 57 minus 1.5, 55.5.
Oh, 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 oh. This is months. Property remained vacant months. The amount illa. ఈ 1.5 months ki this is the answer. This is irrelevant. I will ask you one question. Tell me. You have calculator with you?
Yes, sir.
57 is for 12 months.
Yes, sir.
Okay. 57 is for 12 months. Do like this. 57 into 1.5 by 12.
7.125.
There is 7.125. Now did you understand why they got that number?
Yes, sir.
Hmm.
Yes, sir.
Now tell the answer.
So the answer will be like annual rent minus unrealized rent, 49.875. So whichever is higher.
Tapu. Start again.
Okay, municipal value versus private, whichever is higher. So 66 is the answer. It has to be compared with standard rent, whichever is lower. 59. Then annual rent minus unrealized rent. So
There is no unrealized rent. This is loss due to vacancy. Loss due to vacancy, where we need to reduce?
oh, sorry, sir. Sorry, sir. So it's getting stuck. Okay, sir. So it's like annual rent versus standard rent, whichever is higher. 59 will be the answer. So we have to reduce minus 7.125. 51.875.
Correct.
So sorry, sir. I thought it was.
No problem, no problem. No problem, no problem. You rectify the mistakes in the class itself. Don't do in exam hall. So 51.875 is the final answer. Everyone understood the answer clearly, yeah?
Yes, sir.
Yes, sir.
Yes, sir.
Okay.
Yes,
Let
sir.
us do one big illustration now. See, illustration 5. Find out the GAV. Find out the GAV. Municipal value, fair rent, standard rent, rent of the tenant, old, new. Period when property remain unoccupied because of suitable tenant not available. Okay, this is the period. Loss due to vacancy also given. Okay, 3 minutes time for you. Solve for both property X and Y. Start. Everyone start doing, or else there is no point of a workout session. Everyone put your pen, paper, everything. Write down properly in the notes. Completed?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
What's your answer for X?
69,000. 69,000.
Last 1 minute time. Completed. Okay, everyone? Enough time taken. Completed?
Yes, sir.
Okay, see the answer.
Sir.
See the answer now. First one is the common table that you need to understand. See, simple answer. First one answer is 69,000. Second one answer is 52,500. Have you got the same answer, everyone?
Sir. Yes, sir.
See, calculation I have given you. 61,000, 1,08,000, 60,000. Okay, this is the value. 60,000. Next, see here. Is there any unrealized renta? No unrealized renta.
Also,
No unrealized. But there is a loss due to vacancy or not?
Yes, sir.
Finally, we have to reduce that 69,000 and 52,500. Everyone, have you got the answer?
yes, sir.
Yes, sir.
Yeah, that's it. Next, self-occupied property. Let us also do conceptual analysis on this, and then we'll go into problems. Okay. So, taxability of a self-occupied property. Meaning of a self-occupied property. Self-occupied property means used for self-residence. Annual value calculation. In general, annual value of self-occupied property and vacant property wholly shall be considered to be nil. Okay. Self-occupied property or property is vacant throughout the year. Then both sides we will consider their annual value to be nil. Hence, a reasonable expected rent concept does not apply. Fair rent to municipal value, a comparison concept does not apply. Special case. The nil value benefit shall apply only in respect of two house properties. Okay. What do you mean by two house properties? For example, there is an assessee who is having four house properties. Okay, A, B, C, D. All the four either kept vacant or self-occupied. I can claim only any two properties to be self-occupied now. Remaining two will be deemed as a let out. Everybody understood this point clearly, yeah?
Yes, sir.
Yes, sir.
Everyone understood this point clearly?
Yes, sir. Yes, sir.
Okay. So tell me everyone, repeat, read this point everyone, read out, important. Everyone read this point out. Nil value benefit shall apply only in respect of how many house properties, sir? Two house properties. Okay. Now see, read this line. Everyone read this line. That means an assessee can claim nil value benefit only in respect of two house properties. Irrespective of number of house properties, he actually self-occupied or wholly kept vacant. Selection of house properties for nil value of benefit out of many is at the option of assessee, and other self-occupied property or wholly vacant shall be assessed to tax under the IFHB as if they are let out. That's why we call them DLOP. Means what? What is the DLOP? That's it. Deemed let out property. Next, computation of one self-occupied property. Second one is also same format. That's it. Okay. Please everyone concentrate. Gross annual value of a self-occupied property is nil. Since it is nil, you can't take municipal taxes. Net annual value nil. Standard deduction will not be given. Okay. But interest on capital borrowed will be given. Taxable value is always nil. Okay. Nil or either negative value. Did you understand the format clearly? Yeah?
Yes, sir.
Now, very important. Please see here. Interest on capital borrowed is not allowed on actual basis. Okay, is not allowed on actual basis. Means what? If it is a self-occupied property where you are already taking a advantage of nil gross annual value at that time, again, whatever actual interest you paid on the property, I will not give as a deduction. If it is for the purpose of construction or okay, total reconstruction of that property, 2 lakh will be given as a interest on capital borrowed. Okay. If it is for repairs, renovation, etc., 30,000 will be given as a deduction. Interest on capital borrowed is allowed on accrual basis. Means what? Even though you do not pay, if that amount belongs to that period, I will allow as a deduction. Did you all understand both the points are notes?
Yes, sir.
Okay, done. Next, situational analysis with respect to self-occupied property. Hey, listen, I have given so many situational analysis treatment in each case. One by one, let us try to understand. Okay, see, property is used throughout the previous year for own residential purposes and not let out or put for any other use. Property could not be occupied throughout the previous year by any reason of employment elsewhere or business or profession elsewhere. Property is an independent residential unit with partitions, and in that assessee self-occupied one part, remaining is let out. Property is self-occupied for a part of year and let out for the part of the year. What is all these? Various situations. 1 minute time I will give. Read all the 4 different situations. Exam what will come, God also don't know. So please, when I am saying it is very serious concept, please listen carefully, read properly. First case, property is used throughout the previous year for residential purposes. Property is used throughout the previous year for residential purpose and not let out or not put to use for any other purpose. That will come under this category. Okay. That will come under this category. Next, property could not be occupied throughout the previous year. I did not occupy for self. I did not even let out for any other purpose. That will come under that particular category. Okay. So that will be the second category. Next, property is an independent residential unit with partitions, and in that assessee self-occupied one part and remaining is let out. Property is self-occupied for part of the year, let out for part of the year. Okay. I will ask you one question, first answer. Okay. Everyone, by the time you are reading this concept, I can assume that you already completed house property once before. Tell me how you treat the fourth case. See, let me explain you. In this, first, second, very easy. Property used throughout the year for residential purpose, same computation. Property throughout the year vacant, same computation. Property is independent residential unit, one building, two properties, one self-occupied, one let out. Let out calculations will come, self-occupied properties will come. Okay, self-occupied ki annual value nil, let out ki will take the comparison of reasonable expected rent, all these things will come in place. Up to here, understood? 1, 2, 3, everyone?
Yes, sir. Yes, sir.
Okay, now listen, last point. Exam la 6 times this question came. Not theory. This question they will practically imply and give the questions in exam. Okay, follow. Property is a self-occupied property for part of the year and let out for other part of the year. What do you mean by that? Means there is a property. They will self-occupy for part of the year and they will let out for the other part. 3 months self-occupied, 9 months let out. 3 months self-occupied, 9 months let out. Law says that in the fourth case, treat that property as a let out property only. Even if one day property is let out, that's it. I will treat it as a let out property only. Did you understand the point?
Yes, sir. Yes, sir.
Everyone, that's question came in exam. Okay, see, tax treatment for the supra above points. House property self-occupied throughout the previous year. 23(2) shall apply. Annual value of two self-occupied properties taken as nil. This includes also a situation of vacancy by any reason. If assessee retains exclusive control over the possession of house owned by him, then it is said to be self-occupied, not as a vacant property since it is constructive possession. Next, house property not occupied and kept vacant throughout the year. Same. Tax treatment is same as self-occupied. Okay, and situation one. S1 here represents situation one. Part is self-occupied, part is let out. Part that is self-occupied, including full vacancy, same as step 1 and step 2. Part is let out, topic 7, previous topic. Okay. Most important one is the fourth case. Property self-occupied for some part of the previous year, other part is let out. In this case, benefit of 23(2) is not available. Okay. Calculations are made as if property is let out throughout the year. Who said? Section number 23 only said in subsection 2. The annual value of property consisting of a house or any part thereof shall be taken as nil if owner occupies it for his own residence or cannot actually occupy it due to any reason. See, annual value shall be taken as nil if owner occupies it for his own residence or cannot actually occupy due to any reason. The provisions of subsection 2 shall not apply if the house or part of the house is actually let during the whole or any part of previous year or any other benefit is derived by the owner. Did you understand the point clearly? Bare Act, why we should read? Everyone.
Yes, sir.
Everyone know this point. Fourth
Sir,
one. Huh?
What kind of benefit can be derived other than letting it out? In clause B.
Oh, you are asking in this particular class B, what could be the other kind of benefit that he can get? Correct?
Yes, sir.
See, if I give it for let out, I will get some rental. Okay, that will come under the first category. Okay.
Yes, sir.
Sometimes contracts can be entered like this. A person can tell you, if you don't give it on rent to anyone, I will give you money.
Yes, sir.
Now I am not getting money on let out. I am getting money for not letting out it. Huh? Yes. Those are called as abstinence to do something.
Yes, sir.
In that case, you are not letting it out. But some benefit you are deriving out of that property.
Yes, sir.
That case will come. Everyone understood? Okay. Next, amounts not deductible from IFHP. Okay, amounts not deductible under IFHP. Interest chargeable under this act, payable outside India, TDS not deductible, they will not give deduction. Next, deductions from IFHP. There are two deductions. One is a standard deduction, one is a interest on capital borrowed. See here. This chart, if you can understand, you need not again break your head on interest calculations. How to treat. See here. I have taken capital. I borrowed capital. I have borrowed capital. Now I wanted to claim deduction of interest. Claim it. No problem. If it is a let out property, actual amount of interest, whatever you actually accrued, that will be allowed as a deduction. But if it is a self-occupied property, a problem will come. Okay. See the screen. First, I took loan. I took capital borrowed and I utilized it for repairs, renewal and reconstruction. Repairs, renewal, reconstruction. If it is a self-occupied property, not more than 30,000 is allowed as a deduction. If it is a let out property, actuals are allowed as a deduction. If it is for acquisition or construction, not for repairs, renewal, reconstruction, etc., then post construction, first I will explain. After construction, if it is a self-occupied property, okay, if it is a self-occupied property, if three conditions are satisfied, then not more than 2 lakhs. What are the three conditions? Capital borrowed on or after 1499. Acquisition or construction you should use. Okay, completion within 5 years. If all these three conditions are satisfied, then if it is a post-construction interest on self-occupied property, if these three conditions are satisfied, 2 lakh will be allowed as a deduction. 2 lakh will be allowed as a deduction. No, sir. It is completed in 7 years. Then 30,000 only will be allowed as a deduction, even for acquisition or construction. Next one. For let out property, actuals are allowed. Next, pre-construction interest allowed as a deduction in 5 equal installments. 5 equal installments. Everyone understood?
Yes, sir.
Yes, sir.
Okay. Sir, 5 years from what date? Star mark I kept now. 5 years from the end of financial year in which capital is borrowed. Within that time, you should complete. If you complete, I will give as a deduction 2 lakh rupees every year. Pre-construction. Sorry, post-construction. Very sorry. Post-construction. 2 lakh rupees will be allowed every year. Everybody understood the concept clearly? Yeah?
Yes, sir.
So now we are done with all kinds of adjustments. Now it is, see, these are all pre-construction interest, different illustrations I created for in the regular class. Generally, if you have the document, you can see this. Now I am not going to do this. Yeah. Now, IFHP, in principle, all the concepts we have covered. Okay. Now the only work pending for us is to do some RTP questions, MTP questions and past exam questions. First of all, I want answer from all of you. Are you all comfortable up to here clearly? Yeah.
Yes, sir.
Yes, sir.
Okay. Listen. See here. You are required to compute the income from house property for the assessment year 25-26 for Mrs. Rajini from her house property at Panchkula in Haryana. Municipal value 7,50,000, fair rent 6,30,000, standard rent 7,20,000 per annum. The property was let out for 80,000 per month for the period between April 24 to November 24. Thereafter, tenant vacated the property and Mrs. Rajini used the house for self-occupation. Rent for the months October and November could not be realized from the tenant. Tenancy was bona fide, but the defaulting tenant was in occupation of another property of the assessee, paying rent regularly. She paid municipal tax at the rate of 12%. So 12% applied on what? Municipal taxes will be applied on municipal value during the year and paid interest of 50,000 during the year for the amount borrowed towards repairs of the house property. Now I will ask you the question first. We completed everything in house property chapter. Full chapter we completed now. Just in 1 hour we completed entire revision of house property with the questions with different adjustments. Did you find that all the points in this question we have already covered?
Yes, sir. Yes, sir.
Each and every point in this question had we already covered or not? That's why. That's why. See, notes was prepared with ultimate perfection. Wherever questions can be tested, those all questions have been kept in the notes. The only thing is, if you do some practical questions, you will get more insights on what you learnt already. That's the only thing that will happen. So nothing greatly new things will come in exam. What you learnt only will come. You will know when you do 2-3 questions, you will understand the style of asking the questions. Sorry, anyway. Read the question for 1 minute, everyone. Please don't be overconfident while doing the answers. See the question. Okay, va? Have you read the question?
Yes, sir.
Yes, sir.
Now I will ask one question. Try to answer the question first. Okay. My question is, in this particular question, property is occupied throughout the year, occupied only for part of the year.
Yes, sir.
First, see, let out for how many months? April, May, June, July, August, September, October, November. How many months it is? Very good. 8 months it is. 8 months it is.
Occupied.
Let out. 8 months it is let out, not occupied. 8 months it is let out. Okay. Are you listening, everyone?
Yes, sir. Yes, sir.
So, total, see here, I can tell this way. First April, what is this date? November. November 30th. 31st March. Now you tell me, period between 1-4 and 1-4 and 30-11. Tell me, during this period, what is this period called as? Let out period. After this, after 1st November, after 30th November and 1st December onwards, what it is? Just now we read na Beraklo, I shown you the provision. Do you remember? Even if you let out property for 1 day, it will be treated as a let out property throughout the year. Do you remember?
Yes, sir.
Okay. So now what will be done? So let out property, self-occupancy, you cannot treat it as a self-occupied property. So one concept is closed. There is no question of self-occupancy in this question. Correct?
Yes, sir. Yes, sir.
The only thing that will be available is only what? Calculations on the basis of let out of the person. Correct?
Yes, sir.
Okay. Now listen carefully. How much is the property let out? 80,000. For how many months? 8 months. How much will come? 6,40,000. Okay. So now tell me, municipal value, fair rent, whichever is higher. 7,50,000. 7,50,000, 7,20,000, whichever is lower. 7,20,000. Okay, very good. 7,20,000 and actual rent receivable, how much?
6,40,000.
How much is the unrealized rent actually? October, November, paid or not paid? Not paid. At 1,60,000 unrealized rent is there.
Yes, sir.
That can be deducted from 6,40,000. You cannot deduct in this case because the conditions of unrealized rent are not satisfied. This deduction of 1,60,000 is not available in this question.
Yes. Yes, sir.
Clear? So tell me the format now. GAV how much? 7,20,000. Okay, why everyone?
Municipal taxes, sir.
Municipal taxes 12%. Apply 12% on 7,50,000. See here.
90,000.
Now see the answer. Expected rent 7,20,000, 6,40,000, finally 7,20,000, GAV 7,20,000, 90,000, net annual value 6,30,000, 30% standard deduction. Interest is allowed fully. Let-out property, na?
Yes, sir.
So,
Correct.
let-out, hey, just now I told, na, if it is self-occupied only 30,000 limit is there. So 50,000 allowed. Final answer is 2,39,000. Everybody understood?
Understood, sir. Yes, sir.
Okay. So this is the deduction. So take the calculator. 6,30,000 minus 2.
3,91,000.
3,91,000. Huh? Okay, okay. Anyway, what is the final answer? 3 lakh? Okay. So everyone got the answer clearly, yeah? Everyone? You write your own answers, but the main point that everyone has to understand in this question is very clear. If you observe, whatever we learned in this chapter for last 1 hour, 1 hour, 15 minutes was covered in one single question, correct?
Yes, sir.
Okay. So this is how the questions will be tested and coming in exam. Okay. Now I will ask you another question. Try for this also. Yes. Question number 2. Mr. Ravi, resident and ordinary resident in India, owns a let-out house property having different flats in Kanpur, which has a municipal value of 27 lakh, standard rent of 29 lakh 80,000, market rent and a fair rent 30, annual rent 40 lakh, which includes 10 lakh pertaining to different amenities provided in the building. One flat in the property, annual rent is 2,40,000, remains vacant for 4 months during the previous year. He has incurred following expenses in respect of aforesaid property. Municipal taxes for the financial year 24-25. 10% rebate is obtained for payment before due date. And arrears of municipal tax in the financial year 23-24 paid during the year. If you remember, we discussed this already. Okay. In this 1,40,000, interest on arrears is also included. We will allow municipal taxes and interest. Ante municipal taxes allowed, interest will not be allowed. Lift maintenance expenses 2,40,000, which includes 30,000 of payment made in cash. Salary 88,000 was paid to staff for collecting house rent and other charges. Compute the total income of Mr. Ravi for the assessment of 25-26, assuming that Mr. Ravi has not opted for 115 BAC. Very, very good question here. Try solving it 3 minutes time. Roughly you do, fair answer I will show you. Everyone, have you completed? Everyone, have you completed?
Sir, in the areas of municipal tax, we have to reduce 25,000 from 1,40,000 rate.
Yes.
So the rebate should also be reduced, right?
Yes. Rebate is what something you did not pay. What we discussed in the class, municipal taxes actually paid only will be allowed as a deduction. Rebate means you did not pay. Why we will allow?
No, so which means from the municipal taxes of property, we should reduce the rebate and
Hmm.
should be paying less. That's actually
Yes. Correct.
okay. Which comes 3,60,000.
Yes. Correct. Do it. Do it. Last 2 minutes time. Complete it. You try on your own first, whether right or wrong. First point you tell me. At the beginning of today's class, we discussed one point. There is a pulse of the institute, I said. They will generally ask a question with multiple units in the same building. That point they tested here. Did you at least realize the question nature?
Yes, sir. Yes, sir.
Okay, they are trying to test your knowledge on a property with multiple units. Okay, see, Mr. Ravi is a resident and ordinary resident, owns a let out house property. There is a house property having different flats, which has a municipal value of 2,70,000 something they have given. Market rent, actual rent, which includes so much. He has incurred following expenses like that. Now you please tell me, there are some expenses given in the question. Which expenses? Like lift maintenance, salary, all these things are allowed, not allowed? First tell me that.
Not a lot.
Allowed or not allowed? Okay. See here, how much I am collecting in the form of amenities? Whenever you are collecting the amount in the form of amenities, try to understand clearly. Any amount collected in the form of rent only comes under IFHP head. Any other things you are collecting either should go under IFOS or should go under PGBP. See, when it will go under IFOS, when it will go under PGBP, my business itself is to provide amenities. It will be PGBP. No, sir. Sometimes I will do that means IFOS. That you have to write in the examination as an assumption clearly. Are you understanding what I said? Understood?
Yes, sir.
So what is the point? Here 40 lakh rupees is the annual rent I collected. But in that rent, what is also included? Amenities are included. Okay, amenities how much? 10 lakh. If 10 lakh is not my house property income, this is my business income. Are you listening, everyone?
Yes, sir.
Okay. See here.
Yes, sir.
See here. First tell me, how many flats are there? How many partitions? Building la how many partitions are there? Given or not given? Not given. They did not tell. Number of partitions they did not give. Their first confusion in this question. They did not give partitions, but they said like this. What they said? One flat in the property, annual rent is 2,40,000, remains vacant for how many months? 4 months. 4 months. This 2,40,000 remains vacant for 4 years. 4 months means, see, 2,40,000. 2,40,000. Okay. In this 2,40,000, it is vacant throughout the year only for 4 months. 4 months means how to calculate 2,40,000 into 4 by 12. Okay.
80,000.
Yes. How much it should be? 80,000. Listen. Sorry. Okay. Listen. When this question came in examination, institute has taken one assumption. That assumption below they have given another note also. What assumption? In the question they did not give how many parts that they divided the property. See, he is saying that he is having different flats. Municipal value, fair rent, like that he has given. Incurred following expenses. Municipal taxes are given, arrears are given, lift maintenance expense, all these are given. Total income, all these things given. Did they say how many parts like this divided?
No, sir.
No. Therefore, assumption. Yes. Anyone have a doubt? Anyone have a doubt, or can I continue? Okay. So, institute has taken assumption that there are 4 properties in the building. How many properties here? 4. Sir, why you should take 4, sir? I will take only 2. Take that assumption. But you have to write that assumption clearly in the exam. Do you understand that? Okay. Now tell me. One flat in the property. Annual rent is how much? 2,40,000. One of the flat in the property which is having 2,40,000 remains vacant for 4 months. Okay. Now tell me. 2,40,000 worth vacant throughout there only for 4 months. Only for 4 months. And this is the only property. This is 1/4 of the total property. Therefore, with what they will multiply? They will multiply with 1/4. Did you understand?
Yes, sir.
If you assume 3, with what you need to multiply this? 1/4 or 1/3? 1/3. So like this, you need to solve this particular question. Okay. So now it is already 9:15 almost. I will close here because I also have to sleep tomorrow morning. Again, class is there. So tomorrow we will again continue. Okay. Tomorrow we will continue.
Okay, sir.
Yes. Something you are asking?
Okay. Into 1/4, if we assume, answer will be different. If we assume into 1/3, the answer will be different.
Different. That's
How
why.
will they actually? How they will actually give marks? I don't know.
No. They will clearly tell in the key given by the institute. They will tell whenever there is an assumption that is required. They will clearly tell that if it is 1/3, this will be the answer. If it is 1/2, this will be the answer.
Oh, okay.
Okay, you need not worry about that. They will take care. Okay. Tomorrow I will show you the presentation. Tomorrow we will have the class. Okay, let's not give any break. Tomorrow also let's have a class and complete this, such that we can save one day. Yes.
Sir, that the annual is 2,40,000 is given for the one flat to be incident. Then why are we multiplying again 1/4 to calculate the vacancy?
One flat.
If we assume the
No. Reason I will tell you why. We are taking, though there are 4 flats, 4 flats ke separately we are not doing the valuation. We are doing the valuation for the entire property because all are let out only. There is no other property na here.
So that the 2,40,000 into 4 by 12 into 1 by 4, that calculation I'm asking, sir.
That's what I'm asking. That's what I'm saying. I can understand your question. You are asking anyway that is only for one property, na directly we have to deduct.
Yes, yes.
That's what I am also saying. Ray. Mute.
We also have a doubt in the illustration 5, sir.
One second. I will do. Wait.
Okay.
So, one flat in the property. Shall we?
Yes, sir.
So, one flat in the property. Annual rent is 2,40,000. Okay. Annual rent is 2,40,000. Remains vacant for 4 months during the previous year. Okay. He has a following. Please mute yourself, please, everyone. He has incurred following expenses in respect of the aforesaid property, like that. Madam, please mute.
You continue, sir. You continue.
So listen. Point is, there is only the owns a let out house property. This is the entire house property. Different flats they divided, but they did not give anything clearly. We are not dividing the question into 4 parts. Means what? 2 lakh 27 lakh divided by 4, 29 lakh 80,000 divided by 4, 30 lakhs divided by 4, 40 lakhs divided by 4. Like that we are not dividing. Or 30 lakh divided by 4, we are not dividing them. What we have done, directly we have taken the amounts and we are doing total property as a whole. Do you understand that?
Yes, sir.
So, when we are taking, therefore, what institute has assumed is in that particular question, there are multiple assumptions for this. Assumption number 1. No, sir. This anyway belonging only to one property. So, therefore, 2,40,000 into directly how much we will take? 4 by 12. Some answer will come when you do. What is the answer?
80,000.
How much?
80,000.
80,000. Now, next one. So, this is the first point. 4 by 12 we have calculated. Next, they have taken one assumption in the examination where they are saying that this is totally you are taking, you are not dividing entire answer into 4 parts. But there are 4 house properties. If they are all put together, if the value is 2,40,000, only for that 1/4 of the part, how much is the value they have taken? Do you understand now? So,
The answer they multiplied by 3 by 4.
Is it because
Sir, the answer they multiplied by 3 by 4.
I think it is because
I think it is because
it is because there is rental income and amenities income. Both are. You can see there is 30 lakhs as the rental income and there is the amenities. So I think they are dividing it by 3 by 4 for the rental income.
yes, sir. Yes. This 2,40,000, there are 2 components. One is a rental component, another one is the amenities component is also available or not.
Yes, sir.
yes, sir.
Do you understand what I said?
Yes, sir.
Okay. See, 80,000, sorry, 2,40,000 is what rent? Annual rent.
Annual.
Annual rent total property ke what is the annual rent?
40 lakhs.
40 lakhs. In that 40 lakh, how much part is included? How much part is in the form of amenities?
10 lakhs.
Kada. Means what do you mean by that? 40 lakh property, like 10 lakh is the amenity, means 1/4 part is covered by way of amenities or not?
Yes.
Yes, sir. Yes, sir.
Yes, sir.
Okay. So, 80,000 whatever is there, 1/4, I am talking about PGBP. 1/4 part will go to the PGBP part.
Yes, sir.
Yes, sir.
Yes, sir.
Are you clear now, everyone?
Yes, sir.
1/4 will go to PGBP. Balance 3/4 will be taken by which one?
House property.
House property. That's why they will do like that. 3/4 and 1/4. At least this way you understood, everyone.
Yes, sir.
Okay, so anyway, we will anyway discuss this question. Two alternatives are given. Two alternatives we will do in the class, and we will also do another 7 different kinds of questions, which also includes a non-resident question into that. Okay, once we do all those, other than these two, another 5 questions we are going to do different examination questions, such that you will get full clarity on this particular chapter. Everyone understood the point clearly? Yeah.
Sir, amenities will not go to IFOs.
Amenities, when it will go to IFOS, when your main business is not providing amenities, casually if you are providing IFOS, nothing is given in the question, that also is an assumption. If nothing is said in the question, it is up to you whether to treat it under PGBP head or whether to treat it under IFOS. Understood?
Okay, sir.
Clear?
Yes, sir.
First of all the participants, are you clear up to here, everyone?
Yes, sir.
So property parts are divided into 4, one assumption. Amenities part is divided, one assumption. And amenities, whether to go under IFO, etc., PGBP head is another assumption. With all this, we will prepare notes and tomorrow we will solve this answer and give a final conclusion such that you will get a clarity. Tomorrow we will do that. Clear, everyone?
Okay, sir. Yes, sir.
So tomorrow we will complete all kinds of questions in IFHP, close this chapter, and then we will be going into the main king of the ring in this entire area. PGBP will begin. Clear?
Okay, sir. Okay, sir.
Yeah.
Okay, sir.
Okay then. Thank you very much. Good night.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Yeah. Thank you.
Thank you, sir.